But to the rates rise today, the fourth in a row, another increase of 0.5%. And the Reserve Bank said, well, look, there's going to be more to come this year. We haven't finished yet. This latest 0.5% rise is going to hurt people with mortgages. Yet another $140 a month for people on $500,000 mortgages. Their repayments over the last 4 months will have gone up, by about a grand a month or $500,000. Another $211 for people with a $750,000 mortgage, and $291 a month for people who borrowed $1 million, which a lot will have, particularly if you're in Sydney and Melbourne. And that's on top of the earlier three rises. But the Treasurer today sounded again just like a commentator and not a man with a plan to fix it.
Now, we've been upfront on this side of the House, Mr Speaker, about the growing challenges in our economy, because that's what Australians expect from us. They know that government changed hands at a time of high and rising inflation, rising interest rates, growing economic storm clouds and $1 trillion of debt. Australians know that we are in for a difficult time ahead when it comes to the storm clouds in our economy, but we are confident that we will emerge on the other side of this stronger than before, and that's partly because of the economic plan that we will implement.
Hello, Treasurer. We know times are tough. What we don't know is what you are doing about it. Joining me is Australia's top finance writer, Terry McCrann of the Herald Sun. Terry, thanks for your time. Back to basics first. What are these rate rises actually meant to do, and is it working?
Well, they're meant to do two things, Andrew. First of all, to take away the extraordinary low rates we had in the so-called COVID emergency. The Reserve Bank took rates down to zero, almost 0.1%, an extraordinary cut, and totally unrealistic in terms of where an interest rate should be. I mean, the reality of an interest rate is that it should have some reality to inflation. If inflation is very low, at 2 to 3%, the interest rate should be low, but not zero, because that still means people that are investing, lending money to other people at that very low rate, are getting their money is shrinking over time. So the Reserve Bank had to. I mean, the idea that we could keep the official rate at zero, we could keep variable mortgage rates at 2%, is just insanity. They had to come back to something approaching normal levels. So that's aspect one. And Philip Lowe, the governor, talks about normalising interest rates and monetary policy. I don't think he's gone down far enough down that path quickly enough, but that's a subsidiary issue. But the second thing is you raise interest rates to fight inflation. It's a blunt weapon to fight inflation, yes, but we've discovered over the years that we can't trust governments to do it, or the decades. We can't trust governments to take the tough decisions. That's why we gave it to the Reserve Bank in 1996 and made the Reserve Bank independent with that very specific target. It's to try and get inflation and to keep inflation in the 2 to 3% range. It's officially now 6%, but that grossly understates what the reality is out there. It's more like 8%. The Reserve Bank, Philip Lowe, admitted that it will go to nearly 8% through the course of this year, and he's got to take the tough decisions. I mean, even the rate today, which takes it up to just under 2%, is still way too low compared to an inflation rate which is 8%. It's totally unrealistic to expect it to stay this low. And yes, it's very painful, particularly for those people that took out those $500,000 and higher mortgages when rates were at a level which there was no way they could be sustained at that level. I mean, we can all remember, or you and I can remember, rates in double digits, mortgage rates in double digits. Now, we don't need to go that high because circumstances have changed. But if we don't get on top of inflation quickly, rates are going to go much, much higher than they need to.
Now, you said this is a blunt instrument because here's the Reserve Bank, it's going to do what governments won't. And effectively, what this does is take money out of the economy. All these poor guys and women who've bought a house, they're sitting ducks, they're going to have to pay more. That's money out. And that's because the government won't cut its own spending enough. We've had bloated spending for I don't know how long, both governments. But where is the Albanese government's plan to now fix this cost of living crisis, this inflation crisis, a plan the government claimed it had even before the election? Where is it? I don't see it.
Well, it's hiding somewhere, Andrew, but the plan, quote unquote, which both the Prime Minister and the Treasurer keep referring to, doesn't exist. I mean, it's a fantasy. It's a mess of sort of rhetoric which doesn't actually have any substance or any foundation to it. Now, yes, the Reserve Bank has the primary responsibility to fight inflation, but you're right that ultimately the shrinking buck stops at the Prime Minister's desk. It stops at it in two ways. The government is responsible for the economic state of the economy, of the nation. The government is responsible if interest rates go up dramatically and inflation is very high. The government is responsible if people start losing their jobs and if businesses start going broke. The government ultimately has to deliver the sort of policy mixture, both in terms of the fiscal levels that it controls and assisting the Reserve Bank, because ultimately it takes the responsibility at the ballot box in 2 and 3/4 years' time.
Well, the Albanese government says, look, one of our plans someday is to move us more to renewable energy, and that's going to put downward pressure on power prices. Now, even if you believe them, we're talking way in the future, right? But actually, do you believe them? Do you think their global warming plans will put downward pressure on power prices or upward?
Well, as you said before, Andrew, the cost of the network that we need to build to service a very dispersed, if we get them all, those solar panels and those wind turbines, is going to run into the tens of billions of dollars. And that has to be paid for by power consumers. It'll be capitalised in the cost of electricity going forward. So even if that power was coming free, quote unquote, but we know it's not, the actual cost of paying for the distribution lines would far outweigh the cost of any savings that we would get on the power itself. And you and I know, and I think a lot of people out there know, that it's a fantasy to think that renewable power can ever be cheaper than either coal or gas or nuclear, because that renewable power is not available 24/7, so you still need the backup in some form, and that costs. So, and also in terms of that promise, the $275, that promise was in this term of the Parliament. So he promised to deliver lower power prices before we got all that extra renewables, He was promising it in terms of the current structure of the industry.
I know.
Now, it would be handy.
It shows a guy that has no idea about the economy. Yeah.
Well, he doesn't.
Terry McCrann,
he's like Doc Whitlam.
Yeah, he is exactly correct. I don't know what's worse, the fact that he doesn't understand and made these promises, or the fact that so many journalists treat them seriously. It's very scary. Terry McCrann, thank you so much for your time.